Hello and welcome to this first, or rather, welcome to the third lesson in financial accounting, which is the double entry as well as the trial balance. So, this is by far the most important, I think I would say the most important topic in financial accounting. Why? Because it's the anchor of financial accounting. Everything that we do in this subject revolves around understanding the double entry system, and it also includes the trial balance. Yeah, so I'm going to elaborate more as we progress with our lesson. So let's begin. So let's look at the double entry bookkeeping. So firstly, what we need to understand is the accounting equation. So you've got what we call the statement of financial position. We're going to cover it as we progress. A statement of financial position is built around the accounting equation, and the accounting equation is just assets. All right, just that assets is equal to capital plus liabilities. So now, the theory in accounting is that this equation is always supposed to balance. The assets that the company has is always supposed to be equal to the capital that's pumped into a business, as well as the liabilities which the company has or the entity has. The liabilities, they fall into two categories, the current liabilities as well as the non-current liabilities. Even the assets, the current assets as well as the non-current assets, when you aggregate them, they're supposed to equal the capital plus the non-current liabilities rather, and the current liabilities of that particular entity. So now, when a transaction is made, what you need to understand is there's always that dual effect, right? One account is debited, the other account is credited. So as we progress, you're going to understand what these two mean. So now, I'll give a typical example. Let's give you an example of a handbag, right? So you go to a store, you want to buy maybe a pack of sugar. You've got money in your account, rather in your purse. You've got maybe 100 kwacha in your purse and you want to buy sugar. So now, when you want to make that purchase, there's going to be a dual effect. You are going to lose money, right? Your purse is going to lose money. And then that particular trader who receives that particular amount is going to receive the 100 kwacha, right? So, in some extent, or to some extent, when you get money out of your business, or rather you get money out of your purse, consistent with the example given, that's somewhat crediting, right? And then that particular individual who receives the 100 kwacha for the packet of sugar that's purchased is being debited because they're receiving money. So that's the analogy that I usually use when I'm trying to explain the double entry system. So whenever a transaction is carried out, one account is debited and the other account is credited. So now let's look deep into the double entry bookkeeping. So now we're going to look at different transactions. We're going to look at sales. We're going to look at purchases. We're going to look at sales returns. We're going to look at purchases returns. We're also going to look at the double entry for assets, which are non-current assets, in other aspects of the business. So now, you need to understand the general treatment for sales, right? So when a sale is made, right, we make a sale. How does that affect the books with respect to double entry bookkeeping? So when a sale is made, rather, you need to debit the personal account, right? And then you credit the sales account, right? And this is specifically for a credit sale, because when you make a credit sale, that individual that you sold to hasn't yet given you the money. So you need to take stock of that particular person. So when they pay you, you cancel out the debt that they owe you, right? So the double entry for sales is one, you need to credit the sales account. Then two, you need to debit the personal customer account. So let me just try to demonstrate using my Excel here. So let me open up Excel. So let's say we've made a credit sale, right? So here's the sales account, right? The sales account. And then here we're going to have the personal customer account, which is maybe Piri. So Piri is the one that purchased from us, right? So now each account has got a debit, right? It's got both a debit side. So you've got a debit side here. Then there's also a credit side, right? Then even in the personal customer account, right? This is Piri's account. There's also a debit side, right? Then there's also a credit side. So now, when a sale is made, this is a double entry, right? This is a double entry that you need to know off the top of your head, and with practice, you'll be able to do this with ease. So the first thing that you do, you need to know that sales, they're always credited, no matter what. A credit sale is always credited. So you credit the sales account with the customer name, which is Piri, right? So you write Piri here, and then, so let's say for instance Piri bought goods worth 1,000. I like 1,000, I don't know why, right? So you credit the sales account with Piri, right? So this signifies that the other double entry is in the personal customer account, which is Piri's account, right? So now you need to debit the Piri account with what? Sales, like that. So you don't really have to include this account. I was just using it to explain it, right? So now you debit the same amount which is credited in the sale. And when you do this, then it simply means you've carried out the double entry accounting system or double entry bookkeeping, right? So for sales, when a credit sale is made, you need to credit the sales account and then you debit the personal customer account. What's the personal customer account? This is the account for the customer. When you keep stock of the people that owe you. All right, so let's go back to our PowerPoint. So what I explained, this is it. You debit the personal customer account, which is Piri in this instance. Then you credit the sales account, right? Then for a cash sales, the cash sales is similar, but the only difference here is there's no personal account, right? The sale was on cash. So what you credit is the sales account, similar to a credit sale, right? So we've got a sales account here, right? So you credit the sales account and then you have to debit the bank or cash account depending on how the money is received. So if the money is received via the bank, then you have to debit the bank account. If the money is received via just cash in hand, then you have to debit the cash account. So here, let's say the same transaction, but it was a cash transaction. So you say cash or bank, right? I'm just using cash or bank because I want to insist that it can either be cash or through the bank, So you credit the cash account here with how much? 1,000 kwacha, right? And then what do you debit? You have to debit the cash or bank depending on how the money is received, right? Then you have to say sales, right? Then you enter the amount there. With that done, then you've undertaken the double entry for a cash sale. So now let's go back to our PowerPoint. So sometimes in a business, like it's not always that you make a sale. When you make a sale, you're going to receive the money. So sometimes you can make a sale to your customer. Then the customer decides saying, okay, I think these goods, let me take them back to the person that sold them to me. For one reason or the other, maybe the goods that are damaged, right? Due to the damage of the goods, then this particular customer returns the goods to us, right? So now, how do we carry out the double entry bookkeeping for that particular transaction? So now, what you need to understand is when the customer returns goods to us, this is what we call a sales return. So sometimes we can call it the return inwards, right? But for professional explanation. Okay, for you to just sound more professional, you just have to say the sales return. So now, what's a double entry for the sales return? You need to debit the sales returns account and then you credit the personal customer account. Remember, we want to eliminate that value of goods that was sold, right? And it's logical for us to undertake this double entry. Why? For us to eliminate that particular transaction, since it was a debit, we need to credit it so that when we net or we find the total, that credit amount won't be part of the total. So let me just use this to explain. So let me insist. So the first thing that you need to understand is for sales returns, the customer brings back the goods that they bought, that they purchased, right? So what we do is, one, we need to debit the sales returns account, then we credit the personal customer account. So let me go back to my Excel. We're going to use this same Piri example here, right? So now, since we already have an entry for Piri, what do we do? What we have to do here now is we need to create a sales returns, all right? A sales returns account, right? We create a sales returns account, right? Now, let me just include the debits and the credits, right? So we've created that sales returns account, right? Then what do? The first thing that we need to do, we need to credit. So let's say, let me just give an example. The customer returns goods worth 50 kwacha. So now we need to credit the personal account for the customer, right, with the sales returns, right? Sales returns, the goods are what? 50 kwacha, right? And then we debit. So let me just expand this a bit so that we can have some space here, right? And then here we need to debit the sales returns account with the personal customer account, which is Piri. We just say Piri here, and then we include the amount that was returned, which is 50. So now, when you do this, then you've undertaken the double entry for the sales returns, right? So you've got the sales returns account here. So you create a sales returns account. You debit it and then you credit the personal customer account. This is so what I just demonstrated. This is the explanation here. So now, what is a double entry for purchases, right? So let's begin with credit purchases. So what you need to understand is credit purchases, they're just the opposite of sales, right? So we are the ones who are purchasing from a supplier, right? The other double entry for sales, it's us who are selling. So somebody is purchasing from us. But in the context of the double entry for purchases, we are the ones who are selling, right? So now for credit purchases, we need to debit the purchases account. So one thing that you need to have off the top of your head is the purchases account is always debited. No matter what, the purchases account is always debited. It's always on the debit side. There's nothing on the credit side for the purchases account. It's always on the debit side. So now you debit the personal or the purchases account, and then you credit the personal supplier account. That's for a credit purchase. Then for a cash purchase, we need to debit the purchases account, and then you credit the cash or bank, depending on how we made that particular payment, right? So I'll reiterate. Let me repeat. So when you're carrying out the double entry for purchases, for credit purchase, you need to debit the purchases account. Then you credit the personal customer account. Then for a cash purchase, you need to debit the purchases account, and then you credit the cash or bank account, depending on how that particular purchase was settled. So let me go to my Excel here. Let me try to explain. So now, let's say we've made a purchase of 1,000. I'll say it again. I love 1,000. So we've made a purchase of 1,000. So we've got a purchase of 1,000. So the first thing that you need to do, you need to create the purchases account, right? And then you create the personal supplier account. Let's say we've got Banda here, right? So you've got the purchases account there, then you've got the Banda account here, right? That's the personal account for the supplier, right? So we've got Banda here, right? Banda account. So now let me get these, the debits and the credits, right? Let me just copy and paste them. So I paste them here, right? So now the first thing that we need to do, we need to debit the purchases. We know that the purchases are always debited, so we debit the personal customer account, which is Banda. All right, how much did we purchase? We purchased 1,000. Right, after we do that, the other double entry, we enter it as a credit. So we credit the Banda account with purchases. All right, purchases. So we say purchases here, right? Then how much did we purchase from Banda? We purchased 1,000, right? So let me just try to move this. Let me just try to move this. Yeah, so that it's here. Then here we've got the currency. So now this is the double entry for a purchase. So you've got the purchases account. You debit the purchases account with the amount that was purchased. So in the description, you've got the personal customer, or rather personal supplier account, right? You debit that. Then in the personal supplier account, what do? You credit the purchases. So the description here is supposed to be purchases. Then in the purchases account, the description is supposed to be for the personal supplier account. And remember, this only applies for a credit purchase. So now for a cash purchase, it's the same, but the only issue is there's no personal supplier account, but rather there's the cash or bank, depending on how the money was paid to that particular supplier. So now what do we do here? We need to, so this is already created the, right? So let's say this is the cash, this is a cash, rather a cash purchase, right? A cash purchase, right? So we create the purchases account, right? Then you've got cash or bank here, right? So we made a purchase from Banda, the same Banda, but this time it's cash, right? We made a cash purchase of 1,000, right? And then what's the double entry? As I put it, it's the same, but the only difference is there is no personal supplier account, but rather the money was paid using what method? Is it the bank or cash? If it's cash, then we need to create a cash account. If it's bank, we need to create the bank account. All right, so that we can be able to account for this payment that was made to the supplier. So the debit, you debit the purchases account. Remember, the purchases are always debited, and then you credit the cash or bank, depending on how the payment was made, with how much? 1,000. All right. So now when we do that, then we've carried out the double entry for purchases with respect to a cash purchase. Right. So let me go back to my Excel. Let me reiterate, so the double entry for purchases, remember, purchases, they're always debited. So you debit the purchases account, then you credit the personal supplier account. Why? If that's a credit sale. Then for a cash purchase, you debit the purchases account, then you credit the cash or bank. So now, sometimes, just like for sales, we've got sales returns. We supply something to the customer, and the customer is not happy with what we supply. They return the goods that we sold to them. So even us, we can purchase something from a supplier, but we might not, maybe we might find a fault with what we purchase, right? And then we return that particular item to the supplier. And that's what we call a purchaser's return, or return outwards, right? So now, what's the double entry for a purchaser's return? So one, you debit the personal customer account, and then you credit the purchases returns. So now the purchases returns, this is something that you need to know. The purchases returns, they are always on the credit side. So the purchases that are always what on the debit side. It's the opposite with the purchases returns. The purchases returns, that are always on the credit side. Right? So I'll reiterate. So whenever we've got a purchases return, we've sold something to the customer is not happy with what we sold, or rather, I'm talking about the sales. Okay, we buy something from the supplier. The supplier, sells us maybe goods worth 1,000. Then 50 of those goods, they are damaged. Then we return those goods to the particular supplier, right? And that's a purchases return. What do we do? What's the double entry? We need to debit the personal customer account, and then we credit the purchases account. So let me just demonstrate using my Excel here, right? So here, so already have this personal customer account, right? So all we need to do is we need to create the purchases returns, the purchases returns account. So we create that purchases returns account. So let me just copy the debits and the credits here. All right, you debits and the credits. So remember, we purchased goods from Banda which are worth 1,000, right? So now here, what we need to do, maybe Banda returns goods worth 100 kwacha. So we need to debit the purchases. All right, well, we need to debit the personal supplier account. All right, so we say purchases returns, returns. Right, let me just move this to this. Yes, so we've got purchases returns. How what worth of the goods were returned? So we say 100, right? So the goods worth 100 were returned to the business, right? So now we debit the personal supplier account, and then we credit. What do we credit? We credit the purchases account with what? The personal supplier account, which is Banda. So we debit Banda here. We credit Banda with how much? 100 kwacha. So if you do this, then you've carried out the what? You've carried out the double entry for purchases returned. So it's returns rather. So this is something that you need to understand. You need to have off the top of your head. The purchases returns, they're always on the credit. The sales returns, they're always on the debit side. The purchases, they're always on the debit side, and the sales, they're always on the credit side. So if you know that, then this concept of double entry is going to be quite easy for you. So now, how do we undertake the double entry for expenses, right? So we've got a variety of expenses. You pay for rent, you pay salaries, you pay these other expenses, right, that you may be aware of, maybe insurance, water bills, electricity bills, and the likes. So now, how do we account for those expenses, right? So cash payment, for the most part, expenses are paid on cash. I've not really experienced or come across a scenario where expenses were paid on credit, but yeah, for the most part, expenses are paid on cash. So now, if we have got a cash payment for expenses, you debit the expense account. So remember, for this as well, expenses, they are always on the debit side, just like purchases. Expenses, they're always on the debit side. All right, so you debit the expense account, and then you credit the cash or bank. Remember, this is a cash or bank payment. All right, so now let me just demonstrate using my Excel here. So we've got an expense here. Let's say water bills, right? So you've got water bills. So you've got, then you have to create the cash or bank account depending on how the payment is made, right? Yes, depending on how the payment is made, right? So now let me just copy my debits and credits here, right? Let me just copy my debits and credit here. So these are my debits and credits here. So now remember, we're paying for water, bills, huh? We're paying for water bills. Okay, so now how much are we paying for water bills? Let's say we're paying 100 kwacha for water bills. So you debit, right? You debit with cash here. You say cash, right? You debit the cash, you debit with cash, right? Of 100 kwacha, right? 100 kwacha. And then you credit. What do you credit? You credit the bank or cash account depending on how the payment was made. Then you've got you write water bills here with how much? The same amount which was debited, which is 100, right? And that's how you carry out the double entry for an expense. One, you debit the expense account and then you credit the cash or bank. Something that you need to have off the top of your head is expenses are debited. Similar to purchases, expenses are always on the debit side. So now let's also look at the double entry for capital. So what is capital? Let me just try to explain what capital is. Let's say we're starting a business, we're starting a business. Okay, for us to begin the business, we need to buy maybe, okay, let me say we're starting a salon. We're starting a salon, and for us to start the business, we project saying we need to buy a dryer and all these other equipment that's used in the salon. I'm not well informed about what's found in the salon, but yeah, so everything that's required for us to start that salon business, we say we need maybe 50,000, right? For us to begin that salon business, we need 50,000. So now that 50,000 that we pump into the business is what we call capital, right? So that 50,000 that we pump into the business is what we call capital, and that capital, that's the amount that the business owes you. So remember, the business entity concept is the business and the individual, they are treated as separately, right? They are separate entities. The individual and the business, the separate entities, right? So when you put money into the business owes you, right? So now the double entry is one, you need to debit or credit the account depending on how you pump the money into the business. Did you pump the money through the bank, or maybe you just invested cash, right? So you debit or you debit the bank or cash account, and then you credit the capital account, right? So when you pump money into the business, let me use my Excel to explain this. You pump money into the business, you create two accounts, right? You've got the capital account here, and then you've got the cash or bank account. All right, so let me just make them bold here so that you can be able to see. All right, cash or bank. And then let me copy my debits and credits here. Let me bring them here. So now let's say the money that we've pumped into the business is 100,000, right? So we use the bank. Let me just use both bank or cash of 100. Let me just, okay, for simplicity's sake, 10,000 kwacha. So we pump 10,000 into the business. So we credit the capital account, right? And then we debit the cash or bank account. What's the description that we use? Description that we use is capital. Yeah, so we just say here capital, right? Which is 10,000 kwacha. So now the double entry, let me reiterate, for capital is you credit the capital account, right? And then you debit rather, this is not supposed to be credit, sorry, this is a mistake. You debit the bank account. So you credit the capital account, and then you debit the bank account, right? So now so sometimes the business, some businesses, they need non-current assets. So what's the non-current asset? We're going to look at this in PPE, property, plant and equipment, right? Or yeah, a non-current asset. So let me give you an example. For us to begin a business, we need, maybe we're engaging in Yango, we want to start the Yango business, want to, buy a vehicle, we give it to somebody who's going to be driving it around so they can earn some passive income. So now, what we're doing here is we're buying a vehicle, maybe a Ranex or some other vehicle. We're buying that particular vehicle. That Ranex is going to earn money for us in the business in the long run, right? And that's what we call a non-current asset. So non-current asset, this is an identifiable asset for which the cost can be measured, and it's going to provide, or it's going to earn revenue or money in the long run, right? So that's a non-current asset. So now, if we have a non-current asset, we're engaged in Yango and we buy this vehicle, right? A Ranex, let's say 70,000 kwacha. How are we going to carry out the double entry? So the double entry, if it's cash, if we make a cash purchase, we need to debit the non-current asset account, right? Then we need to credit the bank cash account, right? For a credit purchase, we need to debit the non-current asset account, then you credit the personal account. Then the other issue that you need to understand is assets, they are always on the debit side. Asset, whether current or non-current, they're always on the debit side. And this is something that you need to know. This is something that you need to know off the top of your head. Assets, they're always on the debit side. So when we purchase, let's say a Ranex for Yango business, we need to debit the non-current asset account. So the non-current asset account is the name of the vehicle, which is the Yango account. All right, we just say, sorry, not the Yango account, but maybe the Ranex account, because we've purchased a Ranex. Then you need to credit the bank account. Then for a credit purchase, you need to credit the Ranex account, and then did I say credit? You need to debit the Ranex account, and then you credit the personal supplier account, which if you pay the money, you need to debit the personal supplier account, and then you credit the bank or cash account. So let me use my Excel here to explain this. So we've purchased a Ranex for 70,000. So you create a Ranex account. All right, we create a Ranex account here. Then we also have cash or bank account here. All right, so let me just copy my debits and credits to make my job. What have I done? I think this is not supposed to be here. Okay, this is not supposed to be here. I made a mistake. Okay, so I've got the cash and bank account here, right? Yeah, the cash or bank account. All right, yes, and then I want to copy my debits and credits here. All right, copy my debits and credits account. Yeah, I don't know what's this. Okay, so I've got my debits and credits there. So now we have purchased the Ranex. We debit the Ranex account, right? Remember, assets that are always on the debit side. So what do we do? How did we purchase? So we purchased using the bank or cash. So we say bank or cash, depending on which method that we use to make the payment, right? So we bought this Ranex for 70,000 kwacha, right? So now, then we credit the cash or bank account. Why cash or bank? Because we don't know, whichever method of payment that we use is what we create the account for. So we credit with 70,000, right? 70,000. But remember, in a different scenario where it was a credit purchase, right? If it was a different scenario, we begin by creating the Ranex account, right? We create the Ranex account, right? And then we debit. We also create the personal supplier account, maybe Toyota Zambia, right? Toyota Zambia, right? Toyota Zambia is our supplier for this vehicle. So let me just make them both there, Toyota Zambia, and then let me copy my debits and credits here, right? Let me copy my debits and credit here. So now we bought this vehicle for 70,000. Then we bought it from Toyota Zambia. So we debit Toyota Zambia, right? We debit Toyota Zambia with how much? How much? 70,000, right? 70,000, right? And then we credit Toyota Zambia account with what? With the Runix, right? With the Runix of how much? 70,000. And that's the double entry for a credit purchase for a for an asset rather. All right. Yes. So now that's the double entry. What I've just demonstrated is the double entry for a non-current asset. So now let's summarize what we just looked at. Assets, you need to have it off the top of your head. Assets that are always debited, right? So you debit to increase the asset, then you credit to decrease that particular asset. Liabilities, you debit to reduce them, and then you credit to increase them. In capital, you need to debit. No, I think there's an error here. I think for capital also, you need to credit to increase, and then you need to debit to decrease. So forgive this, pardon me, this is an error. So for capital, you need to credit to increase, and then you need to debit to reduce. All right. So now, so this is the end of the lesson for double entry. So the next section, or the next part of this lesson, is supposed to be the trial balance. So I'm going to end it here, and then the next lesson is going to be trial balance.